Hello everybody and welcome back. Today we discuss stocks, cryptos and commodities right now in what is incredible volatility. There aren't many times that you remember back on and you say, I was there and I was trading and investing, and the last 48 hours have been that. We had 1,000 points down and 1,000 points up on the Nasdaq, but that's only to name a few. Every single thing across the board has been incredibly insane. So was this something of a bigger rally, or was it a front run by algorithms getting risk on after, of course, the invasion occurred? Stay tuned. We break it down right now to try to bring some clarity to the insanity. See you soon. Hello everyone and welcome back. This is our market recap for the 24th of February 2022 in terms of closes. And if you like anything to do with stocks, cryptos or commodities, make sure to subscribe and smash that like button, as we do cover those on the daily here on the channel. So we were correct about the market selling off further, but it happened incredibly quickly and first targets were hit across the board. Whether it was Tesla hitting the $700 target we had in the previous video, or Nvidia getting close to the $200 that we were targeting, everything was getting down. And of course, the Nasdaq was where the rip trade was. We was live streaming the open session. Things were starting to turn around. We actually polled the community. 75%, or I think it was 76% of you were bearish, but everything changed on a dime. And while we believed that there was a gap close, there was even more to come. There was a huge rip, really putting the squeeze on people that were probably shorting the market off the fear. And I'm going to go on a limb here and say a lot of this was algo driven. So let's just break down what actually happened for the session. Well, firstly, the old rule of buying the invasion in this case held true. We saw 5 out of 5 times in the past it being kind of the dip buying process. The fear was there. It instantly purchased through. And I think that's where the algorithms were really playing to that day and the session out. We also know that we've hit some key levels. 20% down, obviously, on the NAS was reached. That is a technical bear market. We also saw around that 15% average in terms of historical for the S&P. So this is where a lot of excluding recession kind of plays end up getting to. If you're an investor, of course, in the session, it was an interesting time to be buying for your investment goals. If you believe the market's going bullish in the medium to long term, which we do tend to believe here on the channel, it makes some sense. Statistics and just history will prove you correct then. But what about if we get further down? Of course, we have had a bearish case scenario here for the SP500 potentially to 3,800. And we're going to be looking at that through today's video. But just remember, the correction technically has hit the average of all time. You may not have missed out on everything. Remember, yes, it's a huge move, but you've got to put it back in clarity, and we'll do that in a second. But that is what usually happens on corrections. Let's go past though what's going on in the Ukraine and Russia and talk about the real picture. And the real picture is still the Fed, still inflation. Never lose sight of the longer term picture versus the shorter term in terms of what's been happening into our thesis into March, where we're probably going to see some rate hikes, whether it's 1 or 2. This particular invasion stuff is actually working in the Fed's favor, but remember, the market here is usually very wrong. So it predicts a certain way that the interest rates are going to go, and then of course it's been wrong almost 80% of the time from what the Fed ended up doing. So do remember that. We also have the psychology of markets that we need to think about as well. Where are we in terms of markets? I think a lot of people were entering the panic in the previous session, and then we saw a huge rip up. A lot of people will now basically say, I want to buy, I want to be in the markets, but we may not have seen the lowest point. Have we hit anger? Have we hit capitulation in this particular psychology playlist? This is something we actually polled the community on, and we turned out that most people were in around the panic area. So it makes sense for some of the trades that we're going to look at in the technical side working out the way they did in the previous session. So what happens after first rate hikes? We know that stocks tend to do well, but leading into them, there's still instability. Remember, we don't have this particular information. The market hates one thing: not knowing what's going on. We now have an idea of what, of course, is going on in Russia and the Ukraine. That gives the market some clarity. It's why you see that bounce off the invasion statistic. Now we move towards what is the Fed doing and what's happening with inflation. Still an unknown in many ways. As we see more economic data, we'll get a bit of an idea. And this is what the market's going to trade off predominantly, but the news headlines will be, of course, saying something else. The 2% trend in terms of inflation is still not met over the last decade plus. Remember, this was something the Fed set back in the day. Yes, we've seen inflation, but we haven't seen it get out of control from the curve fit of 2% target. And the Fed has been terrible at getting the inflation up. So of course we need to keep that in. Let's now talk about the session, because it was wild. Of course, it started off here and it wasn't even really a dip in the morning. It was rally, 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 huge rally in the close of the session. The Nasdaq went up 3.33%. The real story was a 6% plus switch. And while it struggled around here, where actually I thought it would get to for the day, which is the gap close, it struggled here and then it busted through for a nice end of day kind of day trading session. I think there were really a couple of trades that you could have taken. In the morning when we were live streaming, probably the bull case made sense the most, and that's because everyone was so bearish. And then once it busted through here, probably the bull case again. There were potential shorts in this area that people tried and just didn't work out for them. Let's have a look at the sectors that were doing well. It was defensives on the no-go zone. They were being sold out of, and algorithms were really moving into the bashed sectors. Things like TAN, things like clean energy, PBW, all of the semiconductors, technology. These sectors were the ones that the market was picking up. And it kind of proves when you look at all the asset classes, which we'll do soon, like we'll go through gold, go through oil, Tesla, indices, of course, Bitcoin. It proves one thing, and that was that the algorithms were driving the day. You saw a mass reallocation of funds, and it was going across the board. When we put it back in perspective of year to date, though, you'll notice though that things that were getting very hot were the most beaten down sectors. The TAN, the PBW, these were the sectors that did the best. They still hold very poor returns for the year to date. So if you think, oh, I missed the boat, have you really? You've missed out on some percentage, but nowhere near as much as the actual entire sectors have fallen off. Let's now get into the big things that are important. So let's talk about some technicals here on the markets. We'll go through the inverted yield and whether that's occurring. It is still rising here. So we've still got some problems with the 2-year versus 10-year. We don't see the canary in the coal mine yet. We'll continue to watch this space. We also had the SP500 moving average, as in the stocks above the 50-day, coming down to around a 15.9. Now, this historically has been one of those areas where if you can buy dips, you like to buy them in here. It makes some sense along with your technical analysis. I wouldn't mind getting a 10. I mean, these have been the best times in terms of dips, and we'll talk about whether that's still possible very, very soon. But this is the kind of thing that I like to bring together with your technical analysis to give you some clarity on whether historically it's a decent time to buy as well from the fear that's in the market. PCC, put call ratio, stuck in the middle. Obviously, we did see puts open. We're back to a level that if Wall Street could actually hold it here for the Friday close, would make a lot of sense to not paying out too many puts. And we'll talk about that soon. The put wall, we're back above it. And we'll move over now to gold. So anyone that's been trading gold, well, you would know what I think about this. We hit 1960. Now, did we go past it? Yes. Are we back at a point of support? My argument would be yes. It was a wild session, but if you were trading to the correct technical analysis and scaling out, you probably didn't get hurt too much here in the gold trade. It's very wild. This is clearly algorithms. You don't see this type of spiky business, and when we look at oil, without mass allocation changes. Something triggered in all of these algorithms where basically they all started piling in, and it's manipulation of the market at its finest. You can tell because of the huge moves. It wasn't just one little move, it was spikes, like big, big spikes. So let's go down to the 1 hour and just think about this. Look at this massive sell-off occurring. It gets all the way back down to 1870, which was our previous resistance here, and buys off that level. So it's a tough 24 hours here for gold. We're at a point which is very important. What I'm thinking is probably going to occur, and what a lot of you are starting to talk about, is something like this. We've got the trough, we have a peak, we have a rejection candle, 20/50 moving average sitting on top of this 1 hour. If we move back down and then move through, I think the gold trade is back on, and that will be coupled with the market potentially weakening, which it is starting to do right now. And we'll talk about that in just a second. US oil, completely wild. We've talked about this being too risky to trade in some ways. People would go, yes, but I got my $100 out of oil. Well done. Look at me. I'm so good. Fantastic. Yeah, if you've been trading it, it's a very risky trade because it's so geopolitical. Just like the gold trade and the palladium trade and anything else, they all went up, and then as quickly as they go up, they suck people in. They went absolutely super far back. So it's one of those things, you've got to be nimble and fast with this. Remember, if you were doing these, you are generally looking at an entry, a take profit, and a stop loss. We won't talk too much on oil because it's still stuck in the middle of a range and it doesn't show great technicals like some of the others. Now, where the technicals were fantastic, I've got to say, I do love Tesla. It's one of the best day trading stocks. Look, we saw that open in the morning. Tesla's sitting on $700. It hit like a $690 or $699 or something in the futures. And then it just goes out of the gate super hard. What a fantastic trade here for some people. I mean, percentage-wise, you're looking at 14% on the day switch from the 700 to the 800. I thought it was going to get to 760, which is where the gap was moving. It went even further. So let's now break down what's going on here with Tesla. Let's look at it from the weekly perspective. So if we could get a weekly close like this, which hasn't happened yet because we've got the Friday session, that would be a pretty big deal. And I think markets are on the precipice of almost going bullish. Almost. But not quite yet. So that was a big rally. But after a big rally, when we look at the SP 500, we'll notice that there's a lot of fake action here. This seems a little fishy in terms of the movement. So Tesla moves to 800, closes at effectively a resistance, as does the rest of the market. We have previous support at 800. We know we're at the resistance. This is going to be another fantastic day trading session here, because if we get the turnaround story at 800, what could shorters come in and do? They might be starting to say, okay, well, we've hit this support. This is res. We get a lightning bolt here. Let's start shorting this thing down a little bit, even if they're just going for the 750 and that's all they're looking for. It makes sense for some pullback here to kind of draw people back into the fear, or just to continue what has been so far a bit of a decline. So keep looking at some of these stocks. Another one is Nvidia. So looks bullish here on the weekly, hasn't closed yet. We got those mass bear signs. We've been incredibly correct about getting this thing back down to these levels. Now, Nvidia didn't quite get to the 200, but like the rest of the markets right now, you're not so much looking at the individual stock as you are looking at the index. And when the index is at a key resistance or support, you then go and dive into some of your stocks. If you were trading things like Enphase yesterday to the long, you would have beaten the market by a huge portion. Same with Tesla. You know, Nasdaq moved around 6%. Tesla moved 14% up. So much better picks if you can get it. Nvidia, in terms of the movement for the day, moved up 13.7, similar to the Tesla trade. And look where it is. No surprises. Previous resistances or supports here become resistance, and we're at the close. Again, it's a point of where if the bears are going to come back in, they need to do it here. I think bulls, we've got full case scenarios here for bull now. If you get past these wicks, and that's the break of the downtrend as well, I don't know if you can still be bearish on this market. All right. It's very close here. We still have this medium long-term bullishness that's going to come through. So you've got to remember, you have to eventually put down the bear fight if the right things occur. And here for the Nvidia trade, that's where it's looking. Let's talk about Cathie Wood's fund. A good day finally for it, probably driven mostly by, well, everything really in the market for her. The downtrend's still intact. So where are we? Supports become resistance. We've still got problems here. I mean, it's not, yes, it's a great rally, but it's just back to the point. Again, the real market's going to show us the way. IWM, the Russell 2000. Some people are saying, Tom, I think it's a double bottom. You would be correct in initially calling it the potential for a double bottom. You break 210, just like our always bull case scenario is, if we break 210, we've got to go bullish again. Okay? That's probably a good saying. If we break 210, we've got to go bullish again because it's showing that the smaller companies are doing better. It hit the support. It's come back. It's obviously trading back into, so significant levels, but we've still got that A. We've still got that B. Do we end up getting the full C? Remember, the full C kind of shows all of the confirmations across the board. And we'll do that right now in a bit of a quick fire. We'll go through all of these confirmations from major indices that there still could be more shorting to come if we get through these lows, okay? Because if we get through this low, the next logical conclusion is going to be straight down here. And that's a big if. That's why you're mostly looking at day trading, being fast and nimble in scalps, and loading up your longer term investments at these key levels. And that's what you're really doing. You're scaling in DCA, as people call it, dollar cost averaging. Let's move over to the DAX. So the DAX was all green in terms of it hit its 2020. I actually tweeted on this. It hit its previous 2020 peaks. And there's a lot of, obviously, resistance support in here. It bounced off that level. It's weakening here a little bit in the futures market. And it looks good in principle, but there's no follow through yet. So this is a bullish hammer, or a pin bar as people call it. Do we have follow through? The answer is currently no. So the momentum that was here could have just been algorithms gone wild. Effectively, they're out of control. Goldman Sachs is sitting there saying, what's happening? What's happening? Stop the robots. And then they're like, no, dude, they're making money. And it's like, okay, cool, let them go. Until the end of the day, then we'll stop them. I feel really fishy about this move in terms of how fast that rally occurred. Here is another case. We've got here, of course, the potential for distribution on the Dow. So the Dow's bounced up a little bit weaker than the other ones. And again, where are we? It's similar to the DAX scenario. We've got support, potential resistance. Here's the box. This is the area that we expect weakness to occur if it does. And if you take the distance kind of that you expect after that, if the Dow ends up weakening, kind of pushes into this potential for even going back and testing this 30,000, a very big key psychological level. So the Dow is also pointing towards some weakness here in the markets, and the rally wasn't as severe for things like the SP500 and the Dow. This was the first time we saw allocation switch, where it went into growth and it actually came out of all the sectors that have been doing a lot better. This is now a bit more of a broad market kind of weakness occurring. Here's the level that we're watching. And of course, we even have things like giant trend lines that I think people will be looking at in the next 24 to 48 hours just to see whether we breach through those, because that's going to be a lot more of a bullish sign over that point. So the elephant in the room, the US 100, we were live streaming, as we mentioned. We ended up getting that little breach here, and this is where I thought it would go for the rest of the day. Hey, I thought 13.4, 13.5, 13.5 was the gap. They'll make sense. It struggled with the 13.5 for a little while, and there was a bit of fighting, and then you got that clear break. If I was there for the session, which I wasn't, because sometimes I need sleep here in Australia, yeah, it's a clear breach out, and the rally into the COD, the close of day, was massive. Now we're getting in the futures market a little bit of a peak, trough, lower peak, lower trough scenario. Of course, it comes down to the real market more so than the futures, but this is the zone or the area that you expect some weakness to occur. And when you start to look at it on a daily case scenario, it looks like a huge bounce. It is, but it's right where the problems have been. So it's right where you've had previous resistance, previous support. It's kind of now or never for this market if it's going to go short. From the bull case, I think the SPY probably makes it, or the S&P 500 makes it better. But let's just talk about normal crash scenarios or normal high volatility markets. Some of you may have not traded 2020. Some of you may not have traded the GFC or other big crashes before. They tend to be filled with incredible rallies and incredible highs and lows. And here we saw, of course, big switches during 2020 of 7.5% with more shorting that came through. And then eventually we just started gapping and moving up off a catalyst. So all of these huge moves still show that the market is incredibly volatile. And you've got to be careful in these types of markets, because while you're having euphoria right now, you're feeling great about the market, we all are. It's like, wow, we just made like bonker money in on our investments in the last day. If you're buying that bottom yesterday, you may have had a fantastic session. We've got to put it back in perspective. Where is the best market? The SPY. Where is it sitting? Previous supports. You'll notice, of course, volume profile also showing this area, very big around this zone. Big fight here between the bulls and the bears, that 430. Previous supports being tested as resistance. And it's the first touch. So what that means is it's the first time we broke below and then we've come back. And everything in the Ukraine and Russia is probably going to be an everyday piece of news. You're obviously going to see some people trying to sell it for Friday as well, you would think, into, guess what, potential risk on the weekend. Think about it logically. Things could escalate on the weekend. Would it make sense that someone might sell into that Friday? these are some of the things that traders will be looking for on the Friday session. So we're in the area of where you expect some turnaround to potentially occur. The 20 moving average obviously is still very far away from it, which just shows how aggressive this move was. It's come back to some things like the VWAP averages and stuff like that. But yes, support becomes resistance. This is the key area to be fighting it out. If you're feeling bullish, I don't blame you in some ways. You know, you're buying the averages, you're making that kind of sense. We're about to close potentially underneath the 50 exponential moving average. This Friday is key. You get a close above that and it rallies in the next week above the high. Hard to be bear at that point because the 50 moving average is so big. If we close below, it usually means more to come. In fact, statistically, that's what has happened. Yeah, we're at the zone, and that's what I've really got to say about that one. Let's move over here to the puts. The put walls technically sitting around that 400 and 420 zone. Plenty of puts expiring for the Friday session around that area. We've been tweeting this for the week. Of course, it doesn't mean as much with a news-driven kind of market, but still, it makes some sense why we kind of rallied all the way back up here. Lots of puts sitting there. Imagine if you could expire those relatively worthless so that the next week is able to open and the market is more free. It would make sense. We'll move over to the crypto markets. More of the same here. Bit of a kind of indecision candle. The market was weak on the crypto and then it started rallying. The only reason it really rallied, in my opinion, is got to be to do with the Nasdaq. The Nasdaq rally, risk on assets. This is effectively being traded like a growth stock at the moment. So it's not really hedging. It's more of a growth stock. And the way that the crypto market works is it's following the stock right now. If the stock market turns around, expect the crypto market to turn around. That would probably be the best thing. If you're thinking about it just from resistance support here, you break through this support. That's going to be the resistance here. You breach that. And then of course, you're looking back at that 44 kind of K target range. It'll occur only if the stock market also comes with it. If you haven't already, come and follow us over on the Twitters at FX Evolution. And if you haven't, subscribe, like the video if you like it, and let us know, comments down below, what are you buying right now? I still want to see some of your comments. Let's see some of the top stocks that you're buying right now. Let me know. Catch you for now.